Stock of the day, I picked out Wesfarmers. It's out with an update ahead of its strategy briefing today, noting inventory for the rest of the financial year will remain elevated, but its health division, COVID-19 and broader inflation will weigh on results. Shares just tipping into the red this morning, but we'll have to wait and see what the reaction is like post-presentation. Mark, what did you think of the update and Wesfarmers at the moment?
Look, I like Wesfarmers. It's a super reliable business. Obviously, there's a fair bit of the macroeconomic and sector negativity very much already sort of priced in overall. You know, their return on investment is the highest in the diversified retail space. They've got really solid and great management, good balance sheet. That sort of mining has become, and their fertiliser and I think they're opening a mine, lithium and things, is their second largest division now.
It's like a listed private equity business, isn't it, really?
It's increasingly becoming
Bunnings and Kmart in the retail, but has bits and pieces everywhere.
It does. I think it's trying to transform itself, you know, a little bit over time, and you would definitely, given the quality of management and the track record of management, you'd probably back them to execute that. So, look, they've got a strategy outlook today. They have warned on the macro outlook. You know, it's down quite considerably from the highs of around nearly $68. And we're back to basically, it's peaked just before we rolled into the pandemic. So look, I'm happy to buy it here overall, and basically backing management to smooth out that business across a number of sectors, and it's more of a horizontal integration rather than just vertical.
Yep.
So,
Michael, what do you think of Wesfarmers?
Yeah, I like the business, and clearly it was quite expensive mid last year, and a lot of the heat's come out of the share price because of those inflationary concerns. So like any business that has to buy something and then sell it to another customer, cost of goods being purchased is a big issue. But it seems like a lot of that's already factored into the share price, because the announcement today wasn't that those are concerns. It's not a great revelation to the market, and the share price, it's down slightly, but no more than the broader market anyway. So it seems to be holding in there, and the good thing about Wesfarmers is because of their market position and their pricing power, the relationships they have with supply chains, whether it's Officeworks or Bunnings, in that part of the business, they're able to try to make the most of these inflationary pressures. So where another competitor might have an issue with their margins and trying to pass on cost, Wesfarmers is in that enviable position where they could try to get things perhaps a little bit cheaper than some of their competitors, and be able to maybe use this opportunity to win market share because of the value that they can, they can give their customers, and then be in a good position for when the situation improves. So look, I think it's great here as a hold. In terms of the chart, again, it's holding in there. It looked like it was finding some very good support around $48. It did breach that a couple of weeks ago, but that was more in relation to the session in the US, where a lot of these sorts of
the big retailers,
all had a rough night. But then the share price didn't get any worse, so that was a one-off, and it seems to be levelling out. And I think as long as the market doesn't do anything too iffy on the downside, I think Wesfarmers will be back above $48 before long.
Right.
Yeah, that consumer discretionary sector is actually the worst sector for the year so far in the US. It's down 25%. So,
it's down a lot here too.
Yeah,
so when you look at our retailers, who have we had recently? Accent Group's been on. City Chic actually has performed pretty well by comparison, but a lot of the retailers smashed.
Yeah, look, and there is sort of talk around, the US now. There's, enough's enough, and there's, they're pricing in a recession that, maybe not be anywhere near as deep or even happen as analysts have forecast. So, being down 25% is the bargain hunters are starting to come into the more quality end value end of the curve. So, what Matt Common at the AFR's banking summit the other day was saying he didn't think the downturn here would be
nearly as bad as everyone thinks, or the US, and this is their preferred country to be in terms of economy looking strong, which growth figures yesterday were great.
Well, and household spending was up 1.5, which dragged the GDP
Retail.
number up by 0.8. So, the death of the retail sector, I think, is very, very much overstated at the moment. So,
so are you nibbling at some of those retailers?
Yeah, absolutely. Probably nibbled a little bit too early in some of them, to be honest. But look, broadly don't mind the sector. City Chic, Nick Scali, look, Wesfarmers as well. Wesfarmers is probably, at these pre-pandemic levels, has probably got the better margin of safety, I guess, because it's a little bit more diversified.
So interesting.